Hello, investors. This is Todd Thomas, Associate Portfolio Manager with Revere Asset Management. Today is Saturday, November 22nd. The time is 10:22 a.m. Coming to you from Boca Raton, Florida, to bring you the Revere Roundup weekend walkthrough. Starting with the trend gauge, versus last week, further degradation in the trend gauge. If you follow our weekly videos, you know throughout the week we've downgraded the leaders down to a red arrow that had a neutral arrow coming into the week. Also, the medium term was downgraded to red as the indexes lost the 50-day moving average on the S&P and the NASDAQ. Monday, we started off above the 50-day on the major indexes, but closed below it, and there was no close above the 50-day moving average throughout the entire week. All indexes are still above that long-term 200-day moving average, and as Don's studies have confirmed, no damage in the market, and all bear markets occur below the 200-day moving average. So for now, we are just experiencing a correction in growth stocks and major chop in basically all the indexes. Current market state, mild correction. Last week, overall, a correction in growth stock intensifies and the chance of a December rate cut increases. Going through the indexes, the Big 8 was down 2.91% with big hits in the Mag 7. The RG8 was down 2.54. And again, this week I'm going to show the IBD 50 was down 3.26 and the ARC funds were down 4.64%. S&P was down 1.95, but the RSP equal weight came back big on Friday to close the week down 0.84%. The Q's down 3.09, equal weights down 2.19, Dow down 1.91, mid caps down 0.67, Russell 2000 small caps down 0.78, 60/40 down 1.26, GROTECTION down 1.86, and Turbo down a similar 1.85. Last week, the indexes spent the entire week below the 50-day after defending the average the prior 2 weeks. NVIDIA's beat and raise earnings cause a major gap up in the NASDAQ, over 2% gap up, with a reversal to close down Thursday over 2%, placing the indexes firmly below that key average. Fed Governor Williams brings back hopes of a December rate cut despite stronger job numbers for the delayed September employment report. Job growth was much bigger than expected, but the unemployment rate increased by 1/10. The odds of a December cut are now above 70%, causing a weak rebound on Friday. Home building and construction stocks led the weekly gains amid rate cut hopes. Trump hints on Friday at allowing NVIDIA to export more advanced GPUs to China on Friday, sending a slight rally in NVIDIA shares. However, much technical damage done on the weekly. Google introduces Gemini 3, which is an updated version of their LLM models. Google, one of the handful of AI stocks standing out this week. We did see discount retailers Ross, TJ Maxx, and Walmart gain on earnings, and they all noted that they are attracting higher income consumers as consumers are becoming more cost conscious and potentially more strapped. Wanted to revisit the Hindenburg Omen, and the only reason I want to revisit this is because right at the market top, which was also the day that the Fed had announced that a December rate cut was not a guarantee, we flashed a Hindenburg Omen on the 29th of October and the 30th, 2 consecutive days. And now we are approaching that 1 month period where on average the market's down 4.09%. But also the next 2 months show similar, if not worse, deterioration after this indicator flashes down 6% and 6% 3 months later. So potentially rough sledding. This is a secondary indicator, and there are a couple instances where there were positive gains in the months ahead, but you can see it's overwhelmingly negative. So we're very cautious. And again, we do not use the Hindenburg Omen in our analysis. However, it is somewhat of the inverse of the Zwag breath thrusts, which are just some coincident indicators of what we're already confirming with the weak breath, the breakdown in the leaders, and the loss in the momentum names. So caution is warranted. However, not all hope is lost. Also wanted to show this National Association of Professional Asset Managers exposure levels. Also on the 29th, this came in over 100% exposure. And this has a high correlation with market pullbacks when professional money managers are fully invested. And back on that 1029, we saw that 100.83 level. So again, just kind of reviewing what some of the warning signs were at the end of October, 1st of November. Connor put out this piece from Goldman, high beta momentum, their basket in basically 2 days to the low of yesterday was down 14.7%. So you can see their basket of momentum stocks just crashed on Thursday with the NVIDIA reversal and Friday's follow through. It was the worst week since November of 22. That's about when the bear market of 22 was coming to an end. So it's going to be interesting to see whether this action this week was capitulatory. There were several extreme indicators this week, but also we know we're experiencing a lot of chop and a lot of breakdown in the leaders. And that's first and foremost what we go off of. And until that situation improves, we're going to continue to tread lightly at Revere. Seasonality, there is hope. Right around the low on Thursday, that also marks the low in the seasonality of the market, and we were here toward the end of the week. From here, seasonality trends going into year end are extremely strong. So the wind potentially could be at our back, especially if what we saw last week was capitulatory. Looking at the number of stocks making new lows, still not a pretty picture here. And this is the NASDAQ down here with new lows accelerating and remaining net negative 300 plus all week. So we're going to want to see that start to contract as well. And again, this is the break of that 50-day. Coming up with earnings next week, a handful of names, Suntech in the semiconductor space, Ambarella, which has been holding up pretty tightly, Burlington, which is a discount retailer, which is looking pretty good, Alibaba next week, and a handful of retailers coming out toward the end of the week. That's about it. Going to the index charts, S&P down 1.95% on the week, and you can see that break of the 10-week, which is the red moving average. We did hold up on the 20-week moving average, which this is the first test of the 20-week moving average since we broke above it coming out of the April correction. Looking on a more granular level at the daily, we now are below all those short-term as well as the intermediate-term 50-day moving average. And now we have the 8 exponential as well as the 21-day crossing below the 50-day. So a clear sign that momentum is under pressure. Overall, looking at the structure of this, we had this big down bar on this day here. That was Trump and China's rare earth and trade war escalation. And right at the top here, that's when we had Jerome Powell come out and say that the December rate cut was not a guarantee. The market topped. That's where we also had the Hindenburg-Omen 2 days in a row. That's also when the NAAIM came out at 100.8. So pile on of several negative secondary indicators that really caused the top in the market. And then we've got this big bar on Thursday, which was a big NVIDIA reversal day on big volume, and then big volume on Friday on option expiration with some recovery. But if we look at the intraday action on Friday, we can see we gapped up, sold off. Oh, that was Thursday on NVIDIA's. And then we had a small gap up, made a low, and then a rally attempt with a close off the highs on Friday. So that's the S&P. The equal weight was down 0.84%. And this is somewhat interesting because Friday's equal weight volume was the biggest in history. And again, it was an option expiration. But again, we have other OPEX also, but it is notable that this was the biggest volume in history, and that index was up almost 2% on Friday and did slightly overcome Thursday's highs. But again, this index, as we've talked about several times, has gone nowhere since the fall of last year. Okay. So you've got zero progress. But breadth did improve substantially with the rate cut hopes on Friday. And we saw that in the RSP being the leading index on the week. Q's down 3%. That also lost the 20 week moving average this week, interweek, but did close just slightly above that. So we did manage to hold that 20 week moving average, which is equivalent to the 100-day. So you can see a weak rally attempt on Friday, really closed right at the lower end of the range of Thursday's sell-off there. So definitely a warning signal for the NASDAQ growth sector for now. Going to the the NASDAQ equal weight, also down 2.19%. Dow Jones still trading below that 10-week moving average, faring a little better than the other indexes, but down 1.91%. Mid caps, similar to the S&P equal weight, was only down 0.67%, and that also had a pretty big day on Friday, and really tested the 200-day moving average on Thursday, as this index has been extremely weak and also no progress since October of last year, really. So maybe we're going to see some rotation now with the interest rate cuts. Russell was down 0.78. Again, these are very interest rate sensitive sectors, and the Russell closed in the upper range as well on Friday. So rotation out of growth, move into smaller and mid-cap stocks. The VIX also up 18% on the week, still elevated at 23.4. Again, we don't like to really take big risks while that VIX is elevated, and we like to see it down into the teens. Dollar index was up slightly this week over that key 100 level and slightly above that 200-day, that downward sloping 200-day moving average, but broke these highs from back in August. And gold just tight this week, down 0.45%. Gold miners down 3.3%, just below that 10-week moving average. Silver holding up the best above all its long-term moving averages and right on that 21-day moving average. So out of all, silver definitely looks the best. And again, it's been well behind gold over the last couple of years. I've been a disastrous week, down 10.29%. This is the Bitcoin ETF. And you can see that's been trading below the 200, the 50, all the major moving averages now for the last 2 weeks. And that just accelerated the downside with what looks like record volume on Friday. So potential capitulation there, and sentiment is extremely weak. Again, you had this big pop in Bitcoin when you had that big blow up day back here where all the cryptos just collapsed. And again, that's what a change in momentum. That's the danger of that change in momentum and that acceleration. However, it is possible that this is putting in a short-term bottom here. Bond market was up this week as yields fell, and 30-year yields dropped to 4.719%, down about 3 basis points. The 10-year making further progress, down 8 basis points, almost 9 at 4.063. And the mags down 2.2%. You can see those have lost all their major moving average and, are firmly in this downtrend channel. So definite weakness in the mags. Apple trading multi-week tight. Amazon been a disaster, down about 6%. Lost the earnings gap and bounced off the 200-day moving average. And Microsoft right on that 40-week moving average. So definitely one of the worst, also down to that 200-day moving average. Again, the 40 weeks equivalent to the 200-day, just a longer, smoother average. Meta below all key long-term moving averages, and Nvidia now below the 20, the 10, but still above the 30 and 40. And Nvidia is also below that 50-day moving average. So again, got a little bit of bounce intraday on that Trump news, but wasn't able to hold and sold back off. And basically, again, right into below Thursday's close. So nothing good about that chart at all right now. Google, the standout, up 8% on the week, definitely becoming the leader in the AI models and closed extremely strong. So very notable. Netflix, a disaster. All right, so let's go into the ETFs for the week since it was a big rotational and down week. I just want to show you the biggest gainers, and that was in the home construction area, up 1.3%. Doesn't seem like much, but if you were green this week, that's good. The XBI up 0.79%. Looking at those charts, they're in firm downtrends, and that tagged the downtrend line basically right there, but on pretty big volume. So again, at the end of the day, economic picture is weakening, and these stocks had a nice rebound on rate hopes. However, there is no guarantee that that's going to follow through. Just trading tight. And banking, regional banks held up. They were up 1.1% on the week. On the downside, again, we did have some other sectors that were up. Transportation, oil services were up this week. And that was on the day. So again, this is the week column. So really the only two positive sectors on the week were, biotechs too. I didn't have this sorted properly. Biotechs were up 2.3% this week, and those have been in a very strong upward trend. And the healthcare sector was up about 1.8% on the week. So again, these are defensive sectors. Home builders are interest rate sensitive, as well as the regional banking are also sensitive to interest rates, as their quality of loans depend on lower interest rates in a tough environment. On the downside, the biggest losers were solar, down 7.2% on the week, broke all the short-term moving averages and lost the 10-week moving average. Uranium, further deterioration there, right down to that 30-week moving average. And the IGV software broke all long-term moving averages this week, and the semiconductors are right on that. They bounced off that 20-week, which is equivalent to the 100-day moving average. So again, possible we regain steam from there, but a lot of chart repair needed in those areas. Now let's go to the charts on the week. Little bit of a slimmer week. And I'm going to start with SanDisk, down 21% this week. Again, this was very, very extended, well above any upward trend lines, but just broke that hard. And this is to be expected. Still above the 50-day moving average, but this stock on Thursday, if we look at the intraday chart, just started the day off weak and just decelerated. Incidentally, I sold my trailing position in SanDisk on Thursday as it broke that key 21-day moving average. CLS, another extended name that's had a few tests now with a 50-day or a 10-week moving average, broke that 10-week. Again, this is not a sign to buy by any means. At best, we're going to need to see some consolidations here. So these stocks for now, in my opinion, are done. Light was definitely the big standout. Unfortunately, I got stopped out of my trailing position. I was using another break of that 8-day moving average, so I sold that on Thursday. It did recover. Actually, I sold it on the bearish engulfing just below 250, right around 249, just because this was just such a nasty day developing. But Light did manage to close extremely strong on the week and actually up 10% on the week. So, again, extremely extended, but the institutions are piling into Light still. Next tracker holding that 10-week moving average right now. Micron, the first official test of that 10-week moving average. And you can see also on Thursday, just a massive sell-off throughout the day. very weak. I'm not sure whether there was something with the NVIDIA numbers or the Google, the new Google AI version that came out that really started to hit these memory makers, or just a risk off, but it did hold that key 50-day moving average. I also sold this out for Toddzilla and sold it out a little bit higher than where it closed. So I'll wait and see if this is a really successful test of the 50-day and potentially look to get back into both Micron and Light. Also sold AMD, which broke the 50-day moving average this week. Sienna, that first test of the 50-day and 10-week moving average, potentially viable. We'll see. Again, we might have some difficulty. By no means do I think we're just going to shoot right back to new highs on many of these stocks. Light's close, but even Micron and Sienna, I think you're going to spend some time building up some type of base or tightness on this test here. This is another one that tested the 10-week. First Solar also has had a tendency to ride right along that 10-week, pulled back on lighter volume. Still looks like Solar's okay. AMD broke that 10-week. Again, this was enough for me to sell my trailing position. I sold that really on Thursday, and I'm just going to see. Overall, it did hold this gap by just a little bit here, but it's below the 50-day, and it gave back that entire move here. So again, this is not going to make 52-week highs anytime soon, likely. ALB up 1.4%, very strong in the lithium group. Bright Springs Health in the outpatient care area, up another 8%. This has been on the list for a few weeks now. Tower Semi gave back some of the previous gains, extremely extended. Coherent, I thought this held up well. And again, this is in the same group pretty much as Light. They classify it as a different group, but it is heavily in the optical networking area. It was up slightly this week. It broke the earnings gap last week and this week and spent the whole week below it. But overall, it still held the 8 or the 21-day moving average here. So still remains on the list for me. General Motors hanging. FTI, further progress, up 1.03 in the oil and gas equipment. ISRG from that earnings gap 4 or 5 weeks ago, up another 2%. IBM held the 10-week and the 50-day. Not a fast stock, but definitely held that 50-day moving average. Carpenter down 6%, extended. Insight in the biotech area down 2%. New Holdings getting very tight up here. You see that this is struggling with that 16 area, but also staying tight and good earnings and sales here. CommScope, positive week here, up 2.5%. Again, this is the company that spun off one of their divisions to Amphenol, reducing all their debt, $10 billion worth, giving money back to the shareholders, and closed in the pivot zone. So don't want to take this off the list. SQM, another lithium player, up 9% on the week. ATEC up 2.8% on the week. This is a spinal stock, and it's been on the week now for several weeks. Had this nice earnings gap and held the 21-day moving average with a nice push off that average on Friday. So again, can slim like stock, new all-time high territory. Not all-time, but 52-week high going back to 2013, it looks like. Western Digital first tested that 10-week moving average, but extremely extended after a protracted move and major extension. So I don't view these as extremely viable right now. More of watches. Eli Lilly up 3%. Guardian Health up 11%. This looks phenomenal and just had relative strength all week. Cancer Diagnostics. Form factor in the semiconductor equipment, fleeting off. Wayfair. Again, this, to me, this is the stock potentially to play if the home builders are coming back. Extreme relative strength, held the earnings gap, And what other furniture stock or housing stock is pretty much in 52-week high, all-time high territory? This is 52-week high territory. Sanmina backed off, down 8%. Canadian Solar major sell-off this week, down 32%. Again, I was talking about this wall up blue and it just had massive acceleration. First major pullback. Definitely don't want to see that, but still well above all these averages. Just so extended, it was never viable anyhow under our rules. Vastly too thin. Cummins engine up 2%, basically a 3-week tight. Expedia gave back 6% this week. ARGX, another biotech, up 1.2%. GMed, this is another spine company, up 1.8%. Just building this beautiful couplet handle from the gap. Broke that downtrend line for a potential initial entry on the handle. Ultimately, 87.16 is a pivot here. Lemonade held up fairly well considering, down 4%. Comstock Resources and the natural gas down 4.5%. JFrog, this one held up really well. It was actually up one of the few software stocks. So that's notable. Xometry down 7%. Tottzilla got stopped out of this week on the break of that 21-day moving average on Thursday, but bounce off the 50-day. Amphenol extremely extended. Multiple tests of the 50-day and the 10-week. Again, not necessarily a viable pullback to the 50-day, but this one still has major sales and earnings growth, and it's been a leader. But all these leaders are extremely extended, extreme multiple tests of the 10-week. Definitely something that needs basing, I would say. DuPont down 2% after this breakout the last couple of weeks. Teva gave back about 4% after this big breakout 2 weeks ago. B in the mining down 1.3. Teradyne tested that 50-day and 10-week moving average down 6%. Toddzilla stopped out of the rest of this on the break of the gap on Thursday. Cisco Systems down 2.44%, but holding really the lows of that gap and above the pivot zone. So Cisco looks pretty decent here. Baker Hughes, about a 4-week tight, looking at that base. ONC in the cancer treatment area down 4.5%. But held the 21-day moving average. PPH looking beautiful, up 1.38%. And again, just this massive 1-year plus base right in the pivot zone. EQT backed off 4 or 5%, but still in this base. Google, we talked about. Amgen trading a 2-week tight, holding this earnings gap and run situation nicely, riding the 8 EMA. As biotechs are leading the market right now. AZN also made new recent highs and new all-time highs on the monthly, up 2%. UTHR, this is a cardiovascular and cancer therapy and biotech company, up 1.8%. Very good looking chart, sitting right here below a ascending base pivot, a rare pattern. Illumina trading tight after this gap. This chart pattern interests me a lot, and again, it's just been trading really tight up in this flag, and I've got it on my plate to research this. This stock's been around for years, ever since the late 90s, but they're big into genetic sequencing, I believe. Hexcel in the materials carbon fiber area up 5%. So Hexcel had earnings a couple weeks ago, gapped, came back down to that 21-day moving average, broke that Friday of the previous week and just traded off of that and is now riding that ADMA. Dycom, another earnings gap this week. This is in the construction. They lay fiber networks in residential areas, maintain communication networks. Notable breakout here on volume this week. WGS also resurgence off the 10-week moving average after this big earnings gap chop. and now back in the new high grounds. GEV, not a pretty chart right now, but in this big base. And this is what I think a lot of the bigger momentum tech names are going to do. So that's why I wanted to show this chart. Most likely going to need to do some type of choppy base, but GEV's kind of holding tight along this edge. And Don did try a little initial position in this. It quickly got stopped out on Thursday as the whole market fell apart. But that's a name we're just tracking because it's a high quality institutional name. Viavi, this is a optical stock and had the earnings gap, faded back, but also held that gap low. So just watching that name. MedPace, just multi-week tight after the earnings gap. TJ Maxx broke out this week on earnings, and the discount retailers are showing up on the list in full force. Ross Stores, big breakout out of pretty much over a 1 year base of 25%. So not huge numbers here, but nice base breakout. And the theme right now is consumers downshifting right now. Job losses are feared to be picking up, inflation, and people may be shopping at Ross this year for Christmas. Pelozyme up 0.4%. This is building a nice little base here, getting back above that 50-day moving average. It's downward sloping, but it's a stock which has very good earnings. And you see this has got very, very strong earnings acceleration over the next few quarters coming and has had a very nice string of sales gains. ARQT, another biotech on the move. TVTX. Transmedics had a big week, up 13.8%. Ted's talked about this. You've got this base here. It's about 32% deep. A little bit of chop, but it's definitely been showing some accumulation in this base. And that earnings gap. So this is something to watch because this is a stock that could definitely gain some steam here. Very nice base. Agilent, that was up 3%. And this is a multi-year base on base in biotech. So that was notable. Natera, another medical service stock. In genetic testing, up 12% on earnings. Ralph Lauren, trading tight. IDEX Labs, another medical equipment stock. This is a big group right now, up 5%. Ambarella has earnings next week, and this has been trading pretty tight. Got back above that 50-day. Choppy, but watching the earnings report to see the reaction here. Burlington has earnings this week too, along with TJ Maxx and Ross. Could be a stock to watch on a breakout. Steris, this is a medical equipment stock. This was up 1.8%. Multi-year base here going back. Just trading 3 weeks tight and gapped on earnings here 2 weeks ago. Held the 21-day moving average and bounced off of it. So these are all constructive chart patterns in some areas that are non-tech related. Penumbra, this is another medical products company in a base. Travelers broke out this week in the insurance area. AMAT actually didn't do too bad. Held that 10-week moving average. Kept that on the list. Biogen with a nice stage 2 continuation pattern, up 4.6%. LQDA, another biotech, which is showing a blue dot. This has a very nice cut base up here and turning profitable with massive increase in sales and earnings. So again, obviously FDA approval has kicked in and they're selling their key therapeutics, but this stock looks very interesting. Wesco International, this is an electronic parts company, and I think it serves and distributes electrical construction materials, down 2%. Caterpillar, just trading a nice wedge here, declining volume. Jazz Pharmaceuticals with a big breakout this week, up 25%. Very strong post earnings sell-off, but news. I believe they had an FDA approval on one of their drugs. Steel Dynamics, another construction stock, just kind of trading right here up in the upper end of this long consolidation. Nucor similar coming out of the small cup base. And that is it for the weekend review. Thanks for listening this weekend. If you have any questions, my email's todd@revereasset.com. My Twitter handle is at toddmichael70. If you'd like to become a client, our number is 855-REAL-WEALTH or 855-732-5932. Ask to speak with Dan or Don. Have a great weekend, and we will look forward to seeing what happens this holiday week. Happy Thanksgiving week to everybody. Talk to you next weekend.